When looking at Bitcoin's price explodes after the halving. We typically have blow-off tops followed by a capitulation. I'm going to go through the CTKS model to give you an understanding how far left in the bull run we have to go, potential price targets, and the logic behind all of that. Let's get into it and let's run the numbers. Bitcoin is currently 125,135. Now, when we look back, all the way back to 2012, we have a 2012 halving cycle, a 2016 halving cycle, a 2020 halving cycle, and the current one is the 2024 halving cycle. There is a very clear distinction between the psychology of price and, of course, investors and traders are all about psychology. In the bull market, the psychology is overwhelmingly positive. That's like the sun's come out, everything is good, making money, fantastic. You do have some fairly significant withdrawals inside the bull market. But when we get to the top of the bull market, we hammer in a capitulation candle and then we get into the bear market. The bear market is the nighttime compared to the sun time, or the sunlight if you like. So the sun creates the nighttime. The sun creates the nighttime. So just understanding that this is a psychological thing is very important. When you enter into a bear market, what it means is the price is going to come down, and it doesn't look like it comes down much, does it? But these are 80% plus drawdowns. So it's very important to understand that the psychology of a bear market is nothing comparative to bull market psychology. We are currently in the bull market. Now, based on past cycles, how long could this bull market actually go? When we look back to the 2012 halving cycle, it went 367 days. Fast forward 4 years, it went more than that, 526 days. You can see that 360 day, 7 day, and people thought, oh, it's all over because it matches the previous cycle, but it kept on going and it went up literally 42% more than that for 526 days. Now, when we got into the last halving cycle, we had some very tumultuous things in here. This particular dip was not normal price action. A lot of people say, oh, this is just normal price action. Maybe they weren't in the markets at that time. That was the China minor crisis, and the China minor crisis was huge. It did get resolved, but that's actually a 50% drop. After the nighttime of the bear market comes consolidation. After the nighttime of the bear market, capitulation. This is like the inverse to that blow-off top. It's a blow-off bottom. And then we get consolidation. We had consolidation through here, and we always get that consolidation occurring. Now, when the actual halving takes place, we get a price shock. And that price shock takes a little bit of time to get going, but when it starts to get going, it really gets going. Now, what we've seen in the crypto market is not a real get-going kind of thing. It's been really lax. It hasn't blown up. It hasn't done anything like the past cycles. Now, I believe there's a very specific reason why this is the case. I'll show you. There are currently 22.26 million cryptos in existence. The last cycle, there were just like 20,000, and we nearly have 1,000 crypto exchanges, 853. When looking at annual performance, this has created a really big problem. A lot of cryptos are down. For example, this PHB is down literally, I'll show you exactly what it's down. It's down nearly 70%. Gitcoin down 60%. So when you look at all of these different crypto projects, and some are down nearly 90%, if you went out of the top, for example, 20, you could have been badly bled. To show you a bit of a relative difference, Bitcoin is currently up year to date around 34%, Ethereum nearly 41%, XRP 44%. What you're seeing here is that the top cryptos do have the interest, but this is nothing like past cycles. This is a really important backdrop for you just to be aware of. If we get that exponential price action and the cards are aligning that we're going to get that, how far could it go up? What does it mean? How long could it last? And where is it going to get concentrated? That's a really important point. There are, of course, a couple more things to this. For example, if you were in the 2016 cycle and you had that parabolic price action, that doesn't look like much of a retracement in price. But let's just delve in there just a little bit and see what kind of a retracement that actually was. If we look from the top down to around that bottom, it was a 70% reduction in price. A lot of people talk about the bull market support band. If you tapped it, it was a 50% off sale. And these measures are really good measures. They certainly help people out. But the thing to understand is that when you look at a chart like this, it's not clearly evident just how big these percentage drops are. And when you understand how big they are, everything changes. So the question is, even if you can predict the top, will you go further? Will you end up holding on all the way down into capitulation? And this is what typically happens to the vast majority of investors. We know that in 2012, the bull market lasted 367 days. If it was going to be the same as the 2012 cycle, we would have already finished and we would be in a full-on bear market from April 21st, 2025. So we can see that's not the case. What about the 2016 cycle if it hit that, which was 526 days? Well, you can see we've actually bypassed that at the current time. And we're going up. So we've had a bit of a trend change here and it's looking quite good. So it's unlikely that the 2016 cycle and the 2012 cycle hold any key evidence for what is happening in this cycle. What about the last cycle, the 2020 cycle? That lasted 548 days. Now, if this occurs, we would anticipate the bull market closing up shop on October the 18th, 2025. Now, if we looked at the 2020 and the 2016 and we geometrically just smooth those progressions out, we would anticipate that the market would finish on the 12th of November, 2025. But if we took all of these growth rates together, we would anticipate a substantially lengthening cycle closing out on February 26th, 2026. Now, the thing to understand, coming from a background in first and second year statistics, well, teaching it, lecturing it, when I do these kind of projections, this is only what the chart is telling us. We need to look at internal structure, and internal structure is wildly important. It is actually more important. Currently, we're seeing the stock market melt up, gold melt up, silver melt up, and it's starting for Bitcoin to hopefully melt up as well. Now, I say hopefully because we must pay a lot of attention to the structure that underpins the crypto chart. Bitcoin, everything depends on Bitcoin coming up. The first thing to understand, 156,000 is a critical level. If Bitcoin cannot get above 156, it's not going to go higher. This is a tremendous amount of structural overhead resistance inside Bitcoin's chart. Now, what does that mean? Most people don't know where structural resistance is, and if they draw it, they just draw it from recent indicative price, and you'll find that they're always changing their lines. These lines, they do change each month, but not in the way that you might think. These particular areas require 2 levels of standard certification to actually draw up. Inside that 148 to 156 area, there is a massive, and I mean massive, amount of overhead structural resistance. A lot of people simply think it just goes like that. Well, the truth is it could, but it has to get through this 156. And believe me when I say there are so many sellers here that it's just undeniable. That will be an area that you must watch very, very closely. Only with the CTKS method, we could even talk about things like this. One thing that a lot of people do, because they don't know how to get out of the market, they end up holding it through a big blow off and then actually selling it when it comes down, only to see it reverse. This is always the problem inside financial markets, and financial markets always climb a wall of worry. And we've had the US government shutdown, and we've seen that the crypto market has actually been bouncing up. The next area that you need to keep your eye on is 169 to 173. We're going to be doing this on a day-by-day basis on the channel, so please make sure that you subscribe and keep up to date. Press the bell notification icon so you don't miss anything. If we do get a lengthening cycle above, for example, this area 272 to 284, the overhead structural resistance tends to fan out quite substantially above 284, but it's not fanning out below it. And around this level, which is the 148 to 156 area, that is absolutely the area that you must keep your eyes on. All markets are controlled by structure, so if we look at Bitcoin, just zooming into the past day or so, we can see that Bitcoin is starting to just do a bit of a retracement. It tried to do a rally, but definitely just couldn't get there. And we've seen the sellers come in. But what we realistically need to do is that we need to look at structure, because if you understand what's happening inside structure, that is a literal game changer. So what do we see here? This particular level right here at around 125,300 is a very key level of structural now resistance. We saw the rejections are there. This is opening up the target of 124,660. So when you look at Bitcoin, you now know where in the cycle we are, how long we could potentially go for, and there's a bit of a smorgasbord to pick from. Do we get a lengthening cycle? Does it match last cycle? Is it something completely different? You also know the concentration risk is really, really important. Many people, if they were just in Bitcoin or Ethereum, would do far better than going out the risk curve. Literally, what you want to do each and every day is to know these structural levels and know how crypto is interacting with them, and know what the important ones are. The 125,300 is really important. If we can't get above there, we've got bearish momentum. If we zoom out a little bit, we can see down here at this around 124,400, there's fairly reasonable structural support around this area. And down lower at that 123,780, there's also structural support. Basically, the way it goes is the price is always moving in a wave. If it can get above the next level, it's going to try to take out the structural level above. But if it fails, it tends to come back, retest, and make its way down to the next structural level. If it gets enough buyers in, it will re-challenge and then target the upper area. As investors, you need to have these skills. There's absolutely no point. For example, just say this was a daily candlestick pattern of Bitcoin. It was coming up like this, and you saw it weakening, but you held on, and say we entered the bear market here. What would you do? And this is a really important question, because a lot of investors simply say, I'm going to hold no matter what. Now, the problem is, if you hold or buy or come in at the wrong times, your average rate of return on your investment just shrinks dramatically, and you may very well move into loss. Therefore, it's very important to learn how to trade. Why? Because you have to learn how to sell. So many investors get very starry-eyed and they say, oh, all these people have put out these projections, I'm just going to hold on, and it's all going to come true because they know exactly what's going to happen. Nobody knows what's going to happen. The only certainty we have is structure. If a structural level is not obeyed, it targets the one immediately below it. If a target structure price gets above structure, the target is the immediate one above it. That is the certainty that you have, and the only certainty inside financial markets. Some pretty interesting points. We have a couple of commentators inside the crypto market talking about 300,000, 500,000, and 150,000 targets. When we look at those projections, this 150 deals with the structural area, so that is quite a good projection. And the 300,000 is just assuming that we get a blow off top and then pretty much a capitulation. One of the things to just understand, when there's a blow off top, there's always a capitulation. They're bookends, they go together. Now the 500,000 is up here, and there's dramatically thinning structural resistance just below 300. The issue is that money flow into a particular market doesn't mean anything really, because you can move the markets around with small funds, especially on the weekends. That is, if Bitcoin goes up by $1 trillion, it's not taking $1 trillion to move it. It's a fraction of that. Unfortunately, very, very few people understand this factor. So it is very possible for Bitcoin to spike up and then absolutely die. But when you look at it, if you understand the structure inherent inside the markets, it is literally the only thing that you need. Have a great day or night ahead, my friends, and please let me know in the comments, what do you think is the ultimate duration of this market? Where do you think it's going to in terms of where it's potentially going to stop? And what do you think the price target will be? Catch you next time.